sound. Oh. Hi, everybody. Can you hear me now? Hi, everybody. Apparently, there was no sound for the past few minutes. Can you hear me now? Let's see. I will repeat what I said at the beginning. Sorry for the inconvenience if we had problems. Yeah. Okay. Sorry. I apologize for the technical problems. Yeah, no sound here. Okay. Let's begin from the top. Okay. Good morning, everybody. This is the Live Market Open for today's Tuesday, February 23rd. I apologize for the technical issues. I'm Yohay. I'm Forex Crunch and Market Movers podcast, doing the show as usual for FX Street. We'll talk today about various charts and levels, recent developments in markets, the next 24 hours, and of course your questions. Now that you can hear me, you can also post your questions and hear the answers on the chat box. If you cannot see the chat box, it's right here, tlk.io/fxstreet-forex-live-video. So what I said while the microphone was probably off is that we had an ongoing Boris effect yesterday. Boris Johnson buried the pound. We had a debate yesterday in Parliament. We had these two guys, Boris Johnson and Prime Minister David Cameron in the UK, battling each other. Johnson supports the Brexit. Most conservatives do support staying in the EU, and the vast majority of Labour. We had an interesting debate. Yesterday we had the pound falling quite a lot. Okay, so let's look again at the pound. Yeah, this is what I explained beforehand. We had on Friday night pound dollar moving up on the talk that there will be some agreement. But then when we did have an agreement, but Boris Johnson, Mayor of London, and a prominent politician in general talked against it, we had, after the weekend, pound dollar, the pound in general, opening with the gap lower. Things deteriorated. Yesterday, we had it fall all the way to 140.50. From there, we had a recovery to 141.70. Now we're back on lower ground. Still have lots of uncertainty. The most recent opinion poll shows that it's very, very close, 42% to stay in the EU, 40% against, okay? So, of course, this uncertainty about the EU membership, markets hate it, and that's why the pound is lower across the board. We had very interesting levels yesterday also on, ongoing trouble for the pound against the yen and the euro. We'll talk about that soon. Anyway, currently in pound dollar, we have bounced off the lows, but the pound is still under pressure on this uncertainty, despite the fact that I believe, again, on June 23rd, when Brits will go to the polls, I believe the result will be a clear majority to stay in, even if it's not a huge one. But the uncertainty is sort of bad for business, bad for markets, bad for the pound. What's better for the UK, in or out? It's already a political decision. What markets think is that uncertainty is bad and it's better to be in. So that's why you have the pound under pressure. This was the big story of yesterday. It could stay the big story of today, but we have other things today. Apart from what we had in the UK, good afternoon, good morning, everybody. Sorry for technical issues once again. Is what I showed you before, the risk on. Euro, dollar is down, commodities are up, oil is up, stocks are up. So let's look at that, okay? Euro, dollar, we finally had a breakdown under 110.70. And all the way to 110. We didn't fall under 110. We did find support over there, and from there we're seeing some kind of a bounce this morning, something like 15 pips above the lows. In general, 40 pips above the 110 level. Some stabilization. German GDP was okay. I mean, it was the final read of German GDP. It had no surprises whatsoever. Okay. But in general, the euro dollar is down, and it's what we're seeing now is what is usually called dead cat bounce. Even if you throw a dead cat on the floor, it has some small bounce. Sorry if you don't like the expression, but that's a very common expression. So anyway, I think it's just a small bounce, and we could see further falls along the road. Okay, in general, when we have a better mood in markets, and we can see the mood in oil prices, then we have better situation for commodity currencies and worse for the safe haven euro and yen. So this is the price of oil. It is falling now, 2.5%. Looks like a lot, but well, because yesterday it was already got closer to 34, but in general, it's still higher than what the range that we've seen last week. It hardly stood above 30, was battling the 30 line. All in all, we're still higher. So this morning, we're seeing some kind of a correction, dampening of the mood, but all in all, it's still relatively positive. Okay. But this means less demand for the safe haven euro. Now, this is a bit different for the yen, which is usually a classic safe haven and is more safe than the euro. Okay, what do we have in dollar yen? Currently, it fell under 112. Yesterday, it was struggling again. What we had overnight in the Japanese parliament, we had Governor Kurdoa speaking, and he seemed a bit inconfident. He didn't seem confident enough about reaching the inflation target, about doing more to fight deflation, more to weaken the yen. And as some said, I think it was Goldman Sachs, this could become a self-fulfilling prophecy, okay? That if you don't talk down the yen goes up, and this feeds itself. Markets feel the fear, okay? Because a few weeks ago, if you remember, the Bank of Dollar Yen was falling from around 118, 120 to 116. The Bank of Japan talked about action, and they lifted the pound back to the previous levels. And then they set historic negative rates. And dollar yen went all the way to 120, 150. But what happened from there? Markets began questioning the strength of the Bank of Japan, and dollar yen fell to all the way to 111. Okay, we're getting close to this level once again. We had some intervention last time we had dollar yen reaching these levels, okay? But so this is 111 that we've seen last week. Yeah, early in the month. And sorry, and we then had a rise once again. Why? Because first of all, we had the intervention, show markets that the Bank of Japan is serious and it doesn't want a weak dollar yen, a strong yen. And then it was a better mood in markets. But since then, I think traders, markets are questioning the strength of the Bank of Japan and pushing the yen higher. Okay, so we're seeing a stronger yen despite a better mood in markets. So it's, or let's say, and now we're seeing a stronger yen. At least yesterday we didn't see the yen weakening while the euro weakened, while commodity currencies strengthened. Okay. So this is a special effect on the yen. The euro is behaving correctly, let's say, because it's a slightly weaker euro. Okay, and commodity currencies are, of course, with the trend. So we talked about oil. Again, once again, this morning we're seeing some bounce, but all in all, dollar CAD went lower. The Canadian dollar strengthened. Oil was weaker. We didn't get too close to the 136.20 support level, but we certainly fell all the way to 136.50. Now we're bouncing once again, but all in all, the trend remains to the downside, okay? The trend is that the Canadian dollar is stronger as oil prices in general are off their lows. Yeah, once again, in recent hours, we are seeing some kind of change of course. I wouldn't say, once again, I wouldn't say that the market mood has become worse again and that there is a commodity sell-off and the euro is going to strengthen as a safe haven. No, not yet. At the moment, I see it more as a correction. Okay. Let's continue to other, perhaps more successful commodity currency, the Australian dollar. 72.30, holding above this line of 72.20. I mentioned this line as resistance yesterday. We broke above it. We reached a high of 72.45. Currently relatively stable. Okay, so also here we're seeing this kind of correction. Slightly weaker Australian dollar, slightly weaker Canadian, slightly stronger euro. Sort of a small correction this morning, a small risk-off move, but we're still seeing the Australian dollar holding above support 72.20. Further resistance is at 72.80. Okay, and the Kiwi dollar Yesterday it went above 67, almost reached resistance at 67.40, which is the next line, and now it's sliding once again. This 67 line is becoming questionable. Anyway, we're still on relatively higher ground than we've seen yesterday, yesterday morning, that is, in the past 24 hours. Dollar Swiss is falling from the highs, the high being exactly parity. Very nice resistance level here, but remember the Swiss National Bank is intervening. So maybe yesterday it helped dollar Swiss, it helped the Swiss franc weaken, and now with the euro strengthening, it has, little to do. Finally, we had a breakdown on euro Swiss under 110. It seemed to me as if the Swiss National Bank was sort of defending 110. Anyway, if it was defending, it failed or it let go. Decided to let it fall just a bit as the euro strengthening just a bit. 109.68, more or less in the same ranges. Euro pound, okay, euro pound went all the way up to 78.50, more or less previous resistance line. Also here you can see, well, no, not exactly 78.70 is stronger resistance. No, I'm not sure anymore. Let's take a closer look here. Yeah, 70. I would say 78.50 works as resistance here. Also here we have messy trading because of what's going on in the UK, the uncertainty about the UK referendum. I still see 77.40 as some kind of support, and the recent move above it and then below it as sort of all related to the Brexit EU referendum talks. In general, weaker pound on the Brexit, and well, in recent hours a slightly stronger euro, not too much. Strength of the yen can be best seen here. Why? It's gaining a lot against the yen. Sorry, the yen is gaining a lot against the euro. Okay, euro also safe haven currency, but and it weakened yesterday. The yen does not let go; it's strengthening. We had a trade in a range, euro yen of 126 to 129, more or less. But then look at this fall under 126, and since then it's all downhill. And also today the strength of the yen is accelerating. The appearance by Kurdoa in parliament deteriorated the situation of dollar yen, euro yen, boosted the yen. 123.50 is the low, currently 123.60, so we're close to the lows. We're seeing the situation become worse for the Bank of Japan with a stronger yen. Stronger yen can also be seen right here on pound yen. Okay, we talked about the round number of 160, right? Because we had the pair fall to 160 well, last week, and then finding some support yesterday, at least temporarily. We found support resistance 163.80, but then boom, we fell once again, and now we're at much lower ground, 157.86, basically very close to the lows. So once again here we're seeing part of the deterioration during the Asian session. Okay, I mean the strength of the yen, and some of it only just in the past few minutes. Okay, any questions? Let's take a look here. Good morning, everybody, and I apologize again for the sound issues. I began talking, and well, for those of you who are still here, I just repeated everything. Don't worry, you did not miss anything. Okay, any questions? Let's continue to the events that we have today on the agenda. First, the talk about the UK will continue. More opinion polls. Let's see first of all, what we had yesterday. We had only one significant figure, perhaps. German manufacturing PMI came out worse than expected, and that's a bit of a worry because it's the most important sector in the most important country that fell almost to no growth. And also in the United States, the manufacturing PMI by market missed. Remember, it's not as important as the ISM one that we'll get next week, but it's still, we had sort of a winning streak of US figures, and now we had a losing one. Okay, so today we have a much busier day. First of all, immediately after the show, we have the German IFO Business Climate. This is Germany's #1 think tank. They have a lot of influence, not only their figures, but also what they say. So there's also a press conference afterwards. There are 3 figures here, okay? Current assessment, which is expected to slide just a bit. Expectations also slide. And the most important one is business climate, the one in the middle. We're expecting another fall from 107.3 to 106.7. Now, according to Zoo, perhaps #2 think tank in Germany, we already had a fall in sentiment. But IFO has more weight. Let's see if we have a fall to 106.7, which will be okay because it'll be as expected, or if it'll be below this level. Uncertainty comes from not enough perhaps support by the ECB, worries about China. Remember that we're in a positive market mood in general only for the past week or so. In general, 2016 began on a poor note in January and also until not so long ago. And even now, markets are still fragile, are still vulnerable. We have worries specifically in Germany. Well, the Volkswagen crisis is fading out, but the Deutsche Bank issues are still with us, okay? So that's the first thing to watch. Okay, before we continue, I see your question. Do you think pound will be in range until some conclusion? Risky pair to trade now? Is it? It is a risky pair. I don't think it'll stay range bound. I think it'll continue moving on each opinion poll, on each statement by politicians. And of course, we also have data. So range bound, not dangerous, yes. Perhaps we'll see it break under 40 if we have another opinion poll, let's say, showing that there's a growing support for an exit, okay? Because this poll I mentioned came out it came out, well, last evening, but it was actually made. Most of the people were interviewed before Boris Johnson said his word, okay? So perhaps it does not reflect the real market mood at the moment, or the real opinion poll, because he has a lot of weight. He's a good speaker. So perhaps if we have an updated poll that comes after Boris Johnson said his word, and in the UK there are so many posters and so much data, very developed, very busy country. So this could have an impact as well. Of course, if we have a worse market mood, if we see the current trend continuing now, we can see stronger yen, stronger euro, weaker commodity currencies, and weaker pound. On the upside for the pound, perhaps we'll have good data because the UK economy isn't doing so badly. And perhaps we'll have an opinion poll saying, okay, we heard you, thank you, Boris, but we still support the UK staying in the EU. So I think anything basically could happen, but I can't say it'll be range bound. I think we'll have a lot of action, okay? Let's go back to the events we have for today. I hope that answers the question. Yeah. Okay, also from the UK, yeah. Continuing to answer your question, is the inflation report hearings. Mark Carney and his colleagues will go to Parliament. We'll talk about the situation of the economy, inflation, potential rate hike. Remember, the Bank of England turned dovish lately, including the only hawkish member. He became a dove, Ian McCafferty. I don't think he will be speaking today, but anyway, we'll have these hearings and it'll be interesting. And this could also hurt the pound potentially, but on the other hand, markets are already aware of this weakness. Actually, last week we had a positive wage report, so perhaps there'll be a bit more upbeat, but you can never know with the members, with Mark Carney and his colleagues. And I think that contrary to previous appearances in Parliament, this time it'll have a little less weight because of the Brexit talks, the EU referendum talks, okay? For those of you who are brave enough to trade the Swiss franc, we have Thomas Jordan, the one who broke the peg in January 15th, 2015. This big SN bomb. He'll be speaking, probably not saying anything new, but if you are trading the Swiss franc, you should watch out for his comments at 11:15 GMT. Then we have a double feature from the US at the same time at 3 GMT. We have consumer confidence and existing home sales. I would say that consumer confidence has a little bit more weight, but we will need to see a significant impact. We'll need both figures to go in the same direction. So let's first of all look at which one is first here. Another thing to mention before that, at 2 GMT, 3 o'clock here in the old continent, we have the S&P Case-Shiller House Price Index. It isn't as strong as it used to be. The rise is here in prices, but an annual rise of 5.8 that we've seen last time and expected also today is not too shabby. It shows a healthy housing market. Okay, so existing home sales at 3 GMT, there for the month of January. Here a small fall is expected from 5.46 to 5.32. The figures are annualized. It doesn't mean 5.32 million homes sold in January, but it's a figure multiplied by 12. Anyway, each time an existing home is sold, there is some economic activity, but it's not the same amount of economic activity that is produced when a new home is sold on paper. Okay. Anyway, this probably will be overshadowed by the consumer confidence by the conference board, CB, also seen in other calendars as CB consumer confidence. Here we're expecting a small drop from 98.1 to 97. We've also seen a drop in the University of Michigan's consumer confidence from, well, it fell to 92 if I'm not mistaken. Anyway, these are still high confidence levels. If we look at the figures from 2008 when it was under 30, 2009, and we've seen it stabilize 2013 and gradually rise above 90 in the past year or so. In theory, more consumer confidence, more retail sales, more consumption, more economic activity. Okay, the best thing for a market impact is to see both figures, both the CB consumer confidence and the existing home sales, go in the same direction. Recently, US figures have been on a winning streak. Okay, so let's see if both of them win, it'll be positive for the US dollar, especially against the euro and the yen. But if they both miss, then it could go the other way. If we have each one go its own direction, positive consumer sentiment, but a fall in existing home sales, or the other way around, it's of course mixed. Now, we also have events at night, for those of you who like to trade at night. Night here in the old continent, of course, and other time zones, it's a different time, of course. We have the Australian Wage Price Index, another measure of inflation and employment, should have an impact on the Aussie. And number 2 at the Fed, Stanley Fischer, the vice chair, speaks 1:30 GMT. Let's see how he sees the recent economic figures. He might have before his eyes already the GDP, the second revision of GDP. No, probably not. Anyway, he has an impact. He's sort of in the center, perhaps leaning to the hawkish side. And let's see how he sees markets. Okay. Any more questions? Yeah, I see already we have more comments here. So the pound has been dropping. Is it fully priced in before June, especially pound Aussie? Please comment as odd should be weaker. Comment by RBA. Okay, the pound has been dropping, of course, and nothing is priced in, okay? Nothing is priced in regarding the referendum. Everything is now in the water. What we had, the expectations, there was always going to be uncertainty about the Euro referendum. That's one of the things pressuring the British pound, okay? Uncertainty about if Britain will stay in the EU. Always wait on the pound, and this uncertainty will stay with us. But most people expected that the result will remain. Since Boris Johnson said his word, and I think also another minister, a minister in Cameron's government also said he'll campaign for the no campaign. for the leave campaign, then there's sort of much more uncertainty. Now, we'll have many more polls coming between now and June 23rd. That's exactly 4 months from now. So nothing is priced in. Once we have polls going to, let's say we have the stay campaign, the remain campaign, grow in its support for in significant percentages and for a longer time, then I believe we'll have it'll be priced in the UK is staying. But if we have polls that show close call, then we'll have lots of uncertainty and pressure on the pound in each statement moving the pair. So regarding, you asked also about pound against the Aussie. Let's look at the chart. You asked also about the comment by the RBA, right? So RBA does not like the strong Australian dollar, but okay, so also in the Australian dollar, we're seeing a clear trend down, okay? Two factors playing here. First of all, the biggest factor is the Boris factor. Uncertainty about EU membership is killing the pound. The second thing is the small strength of the Australian dollar, because we're seeing sort of this risk-on atmosphere. Again, this morning it's slightly off, but not that significant. But in general, in the past week and also yesterday, we've seen the Australian dollar strengthen against the US dollar. RBA, we had one of the members, not Stevens, but one of his deputies speaking last week, and he said, of course, they're watching, but if you're referring to a specific comment, let me know. But in general, they are not worried too much about economy. Okay. In terms of value, if it remains weaker, Aussie, we should take the opportunity buying. Just my thoughts. Which one weaker, the pound against the Aussie, or anyway? Regarding the Australian dollar, it depends a lot on the mood. We don't have any Chinese figures. We have this wage price index. Regarding the pound, I think it's mostly political comments moving the pair at the moment. Okay, any more questions? We covered all the events for today. We covered, remember, political uncertainty in the UK still plays a significant part. Okay, let's take a look at full events for this week. Actually, we're beginning the real, the indicators, only today, the economic indicators, but of course the political stuff in the UK has a lot of impact as well. Today we have the IFO business climate and this double feature in the US. Tomorrow we have a more important US figure, that's in new home sales, and the weekly crude oil inventories. On Thursday we have UK GDP, and the second release, the first revision, Eurozone inflation and durable goods orders in the US, which is significant. It's for January. And on Friday we have GDP and the core PC price index, which is the Fed's favorite inflation figure. Okay. Another request here for pound CAD. Okay, pound CAD. Also here, I believe, before looking at the chart, the direction, we all know where it's going. Weaker pound and a stronger Canadian dollar. So it's a bit more, am I in the correct chart? Okay, here we are. Also here we see the same kind of lines in the chart. This rise on Friday, like in pound dollar, rise on Friday, big gap to the downside on Monday morning, Sunday night, and then a continued deterioration of the pair. quite a significant fall here from 197, 198, all the way to 192.50. Now we're finding some stability. Sorry, I didn't talk about technical levels on the Aussie dollar and then pound Aussie. I'll get back to that in a second. Anyway, these are the levels that I see that are worth watching, in my opinion. Okay, so 192.70, 50, and 190. We're now close to 194. 194.20 is where I see resistance. Big fall here. Better market mood, in theory, should support both pairs, but it'll probably support more the Canadian dollar with rising oil prices, and the pound moves now according to its own flute, according to the politicians. Okay, a worse market mood will of course hurt the Canadian dollar, and again the pound is on its own. So yeah, that's what's going on here. Anyway, 192.50 to 194.20 are the lines to watch. Let's go back to Aussie, pound Aussie. Resistance awaits here at 195. No, I would say 196. I think it's an interesting line because let's zoom out a bit. Why did I mention this line in the past already? Anyway, more to the top side, we have the 2 level, very round. If we look at the daily chart, that is taking some time to load. We'll see why I mentioned 196. No, I don't know why I mentioned that line. Anyway, the bottom here, let me try to... Oh yeah, look, 196. Let's perhaps zoom out to... This is interesting that the pair respects old lines, okay? Look, 196 worked here as resistance back in the spring of 2015, last year. Now it turns into resistance once again. The pair fell below this line, okay? And here we have 194.40 as support. So these are the levels to watch on pound Aussie. Okay. Let's see if you have any more questions. Yeah, dead cat bounce this morning. Yeah, I think well, dead cat bounce where on pound CAD, perhaps, and would watch out for resistance at 196. Okay, on sorry, pound CAD. Pound CAD 194.20. We are see if we break above it, this line, I would say it's not a dead cat bounce. It's probably a real bounce, but currently it's more of a dead cat bounce, and the pair fell a lot. Again, the driver is the weakness of the pound. Any more questions? Let's go back to euro dollar. Let's see what's going on. So this morning, I would say also a dead cat bounce on euro dollar at the moment. Currently, the high is 110.52, resistance 110.70. Why is that line not in place? Because if we have a break above 110.70, I'll say, okay, this is already a significant break to the upside. But at the moment, I see this more as a dead cat bounce, correction, and the general direction is down. That means a better market mood means a weaker euro and a stronger commodity currencies. Okay. Any more questions? Yeah, I see here GBP weak or just scared. Well, markets are scared that the UK will leave the European Union. This sort of seems to be a higher chance, a higher probability. The Boris effect. So it scared markets. Now, yesterday, things became a bit more clearer with the debate in Parliament, but it's still uncertainty is high. I think we'll need to see a few more opinion polls to get sort of a better picture of how it really impacts. And yeah, you mentioned reason I'm interested in pound Aussie is that yesterday alone it dropped 500 pips. Yeah, it was the classic cross. I mean, cross in this case, the pound was weak because of politics, and the Australian dollar, Canadian dollar, and also New Zealand dollar strengthened because of the better market mood. Yeah, it's confusing for the pound. Yeah, the pound is not that weak. I mean, the pound is currently weak, but the UK economy is not doing that bad. Just on Friday, just when David Cameron was negotiating the deal in Brussels, we had retail sales coming out much, much better than expected. So yeah, it's more like the political events now have more of an effect than the real UK economy. Okay. Any more questions? Let's take a look. We talked so much about the pound. We didn't look again at pound dollar. Well, relatively higher in the past hour or so, but erasing the losses we've seen earlier in the day. Basically balanced 141.45 in the day. Let's update. Yeah, we had this line here at 140.80, but I would mention 140.50 is support, 142.30, which was previous support, now turns into resistance. The range is a bit more narrow this morning. The fall was tremendous on yesterday morning, afternoon, okay? Yeah, from Friday, actually, from the very, very highs on Friday night, we went down 350 pips on pound dollar, and that, of course, results in a big, big effect to the downside in other currencies. As you mentioned, Rolly pound Aussie fell around 500 pips. Do you think pound dollar has a happy level? No, I think it's still looking for some relief, for some happiness. It's still looking for a direction. I wouldn't say it has found or it's getting close to a happy level. You would need perhaps a few more days for it to find a happy level. And my hunch is that this happy level will be lower than the previous ranges. It will not bounce too much. We'll need really opinion polls to be very, very, yeah, maybe an unhappy level. Yeah. Currently it's around 141, okay, but I'm not sure it's found its stability right yet. Okay. Anyway, it's time to go to the wrap up. Once again, I apologize for technical problem with the sound at the beginning. So this is the wrap up for the live market open for Tuesday, February 23rd. We're still seeing the big Boris effect, Mayor of London's opposition to the UK remaining in the EU risks Brexit much more than beforehand, big fall in the pound. Apart from that, we had yesterday and a bit less today, a better market mood. Euro down, commodity currencies are up. Today we're seeing a small correction, but I still see it as a dead cat bounce and not as a change of sentiment. Okay, yesterday we had disappointing manufacturing PMI in Germany and also disappointing market manufacturing PMI in the US. Let's begin with the pound. Currently 141.42 resistance, 142.30 support, 140.50. Big blow on just in the wake of the week, and then it fell to lower ground. Currently some stability. This probably will not last too long. Boris Johnson vs David Cameron, Brexit staying in or going out. Will I stay or should I stay or should I go? Is probably the theme song for the pound. Okay. Euro dollar currently bouncing off the lows. Yesterday we had a break below 110.70 and it found support at 110. 110.40 is the current level. Well within this range of 110 to 110.70. Let's see how things develop. We have an important figure. We'll talk about the events soon. The yen is standing out. The yen looks terrible. I mean, the yen looks strong, which is terrible for the Bank of Japan. Sort of nobody believes the Bank of Japan can really lift the yen, not by measures, not by intervention, and we're seeing the yen strengthening despite the better market mood. Okay, 112 right here. 111 is support. That's the lows that we've seen before we had the small intervention by the Bank of Japan. 113.20 is some kind of resistance, followed by 114.25. Dollar CAD rising from the lows 137.20 yesterday. We had it fall quite nicely with as oil prices advanced. Relative Canadian dollar is still on a recovery path. Dollar CAD's trend is still to the downside. Aussie dollar holding nicely above. Yesterday we had a break above 72.20. Currently 72.40, resistance 72.80. Australian dollar is showing its resilience. And the Kiwi dollar off the highs, but 68.83 at the moment, but at the higher end of the range. Today we have quite a busy day in market. So just after the show, in less than 15 minutes, we have the German IFO business climate. The business climate is the most important release over there. Let's see, we're expecting a deterioration in sentiment, but it should be minor. If we have a big fall, it's of course bad and could imply more action by the ECB. In the UK, we have the inflation report holding hearings at 10 GMT. Usually it has a significant effect because it's a speech by Mark Carney and his colleagues, the governor of the Bank of England. But remember, politics also have an impact. He might be asked about Brexit and probably dodge these questions. I think they have a clear opinion also that economically it would be better for the UK to remain with the EU. Of course, it's not only the economy, there are also many more questions there. For those of you risking yourself with the Swiss franc, we have a speech by Thomas Jordan at 11:15. Probably the main events for today come from the US because it's a double feature: consumer confidence, which is more important than existing home sales. The biggest impact will come if both figures go in the same direction. Recently, most US figures have been coming out better than expected. Let's see if this trend continues. It's a relatively new trend. Only 3 weeks ago, it was all going wrong, especially with that ISM non-manufacturing PMI, which was really a big blow for the US dollar. But since then, things have improved. And for those of you staying up late at night, Australian dollar faces a test with the wage price index and a speech by Stanley Fischer to remind us that it's not only that the Fed is still the biggest factor in town, not only Boris Johnson. Okay. Any last questions? I have here a comment from JM. Good morning. How do you see pound yen today? I see a 3-drive divergence approaching on the daily chart. Thanks for sharing the chart. Well, looking at the chart, yeah, we have it fall along the trend, and also the moving averages are looking all down. Yeah, it's quite a fall. Remember that not so long ago on pound yen we were at the 180s, so that's a huge fall. Pound is suffering, of course, the Boris effect, and the yen, as Goldman Sachs I think pointed out, it's sort of a self-fulfilling prophecy that we'll have a stronger yen. The Bank of Japan losing its battle against deflation, their inability to weaken the yen, of the Bank of Japan to weaken the yen with the negative rate, inability to justify a forex intervention. All this finds hungry investors willing to take their shots at the yen to strengthen it. Anyway, we're off the lows. So we're 80%, 80 pips off the lows, but still 160 remains strong resistance. I would say that there's some weak support at 157.80 because that's a recent low. Okay, so yeah, so that's it for today. Thank you very much, everybody, for coming. I wish everybody a safe and successful trading day. Sorry again for the sound issues at the beginning. Don't worry, you didn't miss anything. I repeated everything. Today we have a busy day, and we'll be here as usual tomorrow. Let's see if we'll still keep talking a lot about Boris or about other stuff, indicators, and such. Okay, so that's it for today. Thank you, and bye-bye.